Hey, it's Clay Trader, and this will be a video chart on the Nasdaq. I did this one a couple days ago, or maybe more like a week ago, but I wanted to get this one back up here and update it at weekend. There's a few things on the lower time frames, the 60 and 30 minute, that I don't want to say have me worried, but they're at least letting me or giving me something extra to look at and keep in mind for the upcoming week. So don't don't take me wrong and think that I'm saying things are going to fall apart, the end of the world's coming, but there's a few little kind of minor red flags that I'll be keeping my eye on. But in terms of the overall chart, which is the longer time frame being the daily, things are looking good. And just kind of hop right off the bat, right there, that is the 50-day simple moving average, purple, and the orange is a 200-day. 50 is crossing up through the 200-day, which is called the golden cross. One thing to keep in mind, because moving averages are lagging indicators, all they're doing is telling us what's happened in the past. It's not any sort of predictive type indicator. But nonetheless, this is still good. We're getting this to cross up through the 200-day, which is pretty much just confirming that this move here, really is getting to become a strong move here, and it's just real solid. And it's not like it's going to be a little one-day pop or a couple week pop. It's really starting to cement itself in and look good. So good to see the golden cross on the daily chart. Now let's hop back here to 30-minute time frame. And what I am talking about on both the 30 and 60 is a negative divergence. So what does a negative divergence mean? Well, if you look at, let's say, these highs right around here and correspond that to the MACD, look where the MACD is at. It's up here. However, you come back over here and you look at where these highs are, and these highs are clearly higher than these ones, and you correspond that to where the MACD is down here, and it's lower. So this is what we call a negative divergence, because you can draw the trend line down like that. The price has been going up, however the MACD is sloping downwards. Now these are just indicators. The key thing and king in terms of technical analysis and charting is price. So price is the thing that matters, second being volume. So like I said, that's why it's not time to freak out, but it is worth noting we do have a negative divergence on the 30-minute. So this could be suggesting that we're running out of gas a little bit here, and I might need to pull back. But remember, this is a 30-minute time frame, so when I say pull back, I'm not saying that we're putting in a whole new bottom. I'm just saying on this time frame, might be pulling back. Hopping over to the 60-minute, same thing. You can see these highs corresponded with a MACD here, and then these highs corresponded with a MACD down here, which gives the ability to draw this downtrend line like that. So another negative divergence. Now let's say there is a pullback and it decides to cool off. The ideal level that I would like to see hold is first being this little trend line we have here. And actually, if I wanted to, I could draw it back to this high right here. That would be the ideal place. But if that one doesn't hold, then I'd really like to at least see it hold here and not fall through. If it does fall through, then it'll probably drop down here, close this gap that it has right here. But this should really be a solid area of resistance. As you can see, we have once, twice, and then 3 times here, where it held the price down. So this should be pretty solid support. If that doesn't hold, then I'm looking forward to come back down here and test the 200 period simple moving average. But hopefully this trend line holds. This is first best option, second best option, third best option, and then this is kind of the what I like to call the MH support level. MH standing for must hold. If this doesn't hold, then that's when I'd really start to get worried about things. But let's just keep our eyes on these levels in the coming days, as we could be getting a pullback here due to this negative divergence. But like I said, on 30-minute, we're just talking 60-minute here. This isn't the daily chart or weekly chart or anything like that. So let's hop back up to the daily. Get rid of these things real quick. Now in terms of resistance and future resistance, we got to go back quite a ways now, since we are making such a solid move. But But our next resistance is coming from right here. That was back from, let's see, looks like right from early October or late November or late September, early October. You can see that we had a gap down, and then from there really fell apart, had a bounce, but when it bounced back up, hit that spot and hasn't recovered since then. But we are now approaching it here. So this level is right around 1905. This high right here is at 1896. So only a 9-point difference between this point and this point. So this 1900, whatever you want to call it, 1905 is going to be a pretty important area, which is no surprise because it is a whole number, the 1900, and usually those are psychological levels anyway, so it's worth keeping your eye on. But once again, this was the Nasdaq. Keep your eye on those 30-minute and 60-minute charts. But the overall context of the trend that I'm using is based on the daily chart. And yeah, no doubt about it, we're in an uptrend. So things are looking good, but maybe for you shorter-term players out there, this next week or two might be seeing somewhat of a pullback. So if you have any questions, feel free to shoot me a message. But if not, thanks for listening.